Imagine this. You need money fast, not thousands, not a giant loan with mountains of paperwork, just a small amount to cover rent, fix your car, or get your business moving. You look at your bank account and wonder, how do I get this money without drowning in debt? That's where microloans come in. And today, I am going to show you exactly how to get a microloan fast and easy, step by step. By the end of this video, you will know more than most people who ever think about borrowing money. Number 1. What is a microloan really? A microloan is simply a small loan. Think of amounts like $500, $1,000, maybe up to $50,000 depending on the program. The idea is not to bury you in debt, but to give you just enough to handle something important. Unlike big bank loans that require huge credit checks, long histories, and big collateral, microloans are designed to be more accessible. Example: imagine Sarah, who wants to buy supplies for her small bakery. A bank might reject her because she has limited credit history, but a microloan program could give her $5,000 quickly, allowing her to buy flour, ovens, and pay her staff until her sales pick up. Number 2. Why microloans exist in the first place. Microloans started as a way to help entrepreneurs in developing countries, people who had skills but no access to banks. Over time, microloans became popular in the USA too. Organizations, nonprofits, and even government programs started offering them to help small businesses, side hustlers, and sometimes even individuals with urgent needs. Think about it this way. Instead of ignoring people with small credit needs, microloans step in to bridge the gap. They are the financial version of a ladder when you cannot reach the top shelf. Number 3. Who can actually get a microloan? This is where most beginners get confused. Many think microloans are only for business owners. Not true. Some microloans are strictly for small businesses, yes. But others are for individuals who need emergency cash, like medical bills or unexpected expenses. For example, the Small Business Administration in the USA offers microloans up to $50,000 for startups and small businesses. At the same time, community lenders and nonprofit organizations may give microloans as low as $500 to individuals who need a quick lifeline. Number 4. Where do you actually go to get one? This is the million-dollar question. And here is the answer. You can get microloans from 3 main places. First, nonprofit organizations. Many focus on helping low-income families or immigrants. Second, government-backed programs like SBA microloans. Third, online lenders and peer-to-peer platforms that make applying super quick. For instance, Kiva is a nonprofit that offers microloans funded by people all over the world. Meanwhile, the SBA works with local intermediaries to distribute funds to small business owners. And then there are fintech apps that approve small amounts in hours, not weeks. Number 5. What do you need before you apply? Here's the part most people skip, and it costs them time. To apply for a microloan, you need some basic information ready. Lenders want to know who you are, why you need the money, and how you will pay it back. That means identification, proof of income, sometimes a simple business plan, and references. For example, if you are a rideshare driver needing $2,000 for car repairs, having proof of your Uber or Lyft income will strengthen your application. If you run a small online store, a one-page outline of your sales and expenses could be enough. Number 6. How fast can you get it? This is the part you are waiting for. How fast is fast? The truth is, it depends on where you go. Online lenders might fund your account in 24 to 48 hours. SBA or nonprofit programs might take longer, maybe a week or 2, because they want to review more details. The key is knowing which option matches your urgency. Example: John applied for an SBA microloan for his landscaping business. It took 2 weeks, but gave him $15,000 at a fair interest rate. On the other hand, Maria applied through an online platform and had $800 in her account within 36 hours to cover medical costs. Number 7. What about interest rates and fees? This is where you have to pay attention. Microloans are usually cheaper than payday loans, but not always free of risk. Interest rates can range from as low as 7% through nonprofits to as high as 30% with some online lenders. Still, compared to payday loans charging 400% or more, microloans look like a lifesaver. Example: Borrowing $1,000 at 10% interest over a year means paying back about $1,100. But borrowing the same $1,000 through a payday lender might trap you into paying $2,000 or more because of rollover fees. Number 8. What are the risks you should know? Yes, microloans are powerful, but they are not magic. The risks are real. If you borrow without a plan to repay, you can still hurt your credit score, lose assets if collateral is required, or fall into a cycle of borrowing again and again. Example: a small shop owner borrowed $3,000, but instead of investing it wisely, he used it for daily expenses. When sales did not grow, he struggled to repay. The loan helped at first, but became another problem later. Number 9. How to choose the right lender. This is the secret that makes microloans fast and easy. Do not apply everywhere blindly. Choose based on your need. If you want the lowest rates, look at SBA or nonprofit lenders. If speed matters more, online lenders or peer-to-peer platforms are better. Always read the terms before signing. Imagine it like choosing between 3 restaurants. One is fancy but slow. One is affordable but crowded. One is fast but costs a bit more. Which one do you pick? The one that matches your hunger and your wallet. Microloans work the same way. Number 10. How to increase your chances of approval. This is the part nobody tells you. Lenders love preparation. The more ready you look, the faster they say yes. Show steady income, keep your credit report clean, and explain clearly how you will use the money. Even small things, like writing a 2-paragraph business plan, can make the difference. Example: Emily wanted $2,500 to expand her handmade jewelry shop. She showed her Etsy sales numbers, her future goals, and her repayment plan. She got approved within days because she proved she was serious. Number 11. When should you not take a microloan? Here's the twist. Sometimes the best loan is no loan at all. If you only need $200, maybe borrowing from family or selling in used items is smarter. If you already struggle with debt, adding more might be dangerous. A microloan should be a stepping stone, not a crutch. Example: Mark wanted to borrow $1,000 to take a vacation. A microloan could have approved him, but repaying with interest would have cost him more than the trip itself. In that case, waiting or saving would be better. Number 12. Alternatives you might want to consider. Microloans are great, but not your only option. Credit unions, community banks, or even employer paycheck advances might offer small-dollar loans with fewer fees. Some apps let you borrow against your future paycheck at low cost. These can sometimes be faster and cheaper depending on your situation. Example: Lisa needed $400 to pay her utility bill. Instead of a microloan, she used an app that let her advance part of her paycheck for a $5 fee. She covered her bill instantly and avoided higher interest. Number 13. Can microloans help build your credit? Yes, they can. Many microloan programs report your payments to the credit bureaus. That means if you make on-time payments, your credit score can improve. A higher score makes it easier to qualify for bigger loans later. Example: David took a $1,000 microloan from a nonprofit lender. He repaid it on time over a year. By the end, his credit score increased by 60 points, giving him access to a car loan at a lower interest rate. Number 14. Do microloans require collateral? Not always. Some lenders want collateral, like equipment or savings, especially for larger amounts. But many microloans are unsecured, meaning no collateral is required. This makes them safer for borrowers who do not own valuable assets. Example: a daycare owner applied for a $7,000 microloan. She offered her daycare equipment as collateral. Another borrower applied for $1,000 and was approved without putting up any assets. Number 15. Are microloans only for low-income borrowers? No, but many programs prioritize people with limited income or resources. The goal is to help those who cannot access traditional bank credit. Still, if you qualify, you can get a microloan even if your income is stable. Example: Kiva focuses on people who need small amounts to survive or grow businesses. But SBA microloans are available to anyone who meets their small business criteria, no matter their income level. Number 16. Do microloans work for side hustles? Absolutely. Many microloan borrowers are people with side hustles, not full businesses. Whether you sell baked goods, walk dogs, or resell items online, a microloan can give you cash for supplies, advertising, or tools. Example: Carla used a $1,200 microloan to buy a better camera for her freelance photography. That one investment doubled her side hustle income within 3 months. Number 17. Are there grants that work like microloans? Yes, but with one big difference. Grants do not need to be repaid. Some organizations offer small grants alongside microloans for entrepreneurs who show promise. These are harder to get, but worth applying for. Example: a local nonprofit offered $5,000 grants to women starting businesses. Some applicants received a grant, others a microloan, and a few received both. Number 18. Do microloans have flexible repayment terms? Yes, and that is one of their biggest advantages. Instead of demanding repayment in just 2 weeks, like payday loans, microloans often give you months or even years. Terms can range from 6 months to 6 years depending on the lender. Example: a farmer received a $4,000 microloan with a 3-year repayment plan. This gave him time to plant, harvest, and sell crops before paying back the money. Number 19. Can microloans fund education or training? In some cases, yes. Certain community programs allow microloans to cover courses, certifications, or tools you need to boost your skills. This makes microloans not just a safety net, but also a stepping stone toward better income. Example: Jenna borrowed $1,500 to pay for a coding bootcamp. 6 months later, she landed a tech job making twice her old salary. So here's the big picture. Microloans can give you fast access to small amounts of money when banks slam the door. They can be lifesavers for emergencies or business growth. But the secret to making them truly fast and easy is preparation, knowing your options, and choosing wisely. Now let me ask you this. If you needed money tomorrow, would you go for a microloan, or would you try an alternative option first? I would love to hear your thoughts in the comments.